Thursday, 2nd of July 2020. And it's non-farm payrolls day. It's something unusual because Friday it's always recognized as a non-farm payroll day because of the 4th of July, because of the long weekend in US. In July 2nd, Thursday, that's non-farm payrolls day. I had a chance to interview Michał, the macro guy. So first we are going to go through that short interview and then we'll check few charts. Enjoy, guys. Hi guys, few hours ahead of the non-farm payrolls. Piotr here, this is Light Forex Global YouTube channel. A little bit different introduction because the week is also a little bit different. Non-farm payrolls is coming within the next few hours. It's coming this Thursday instead of the usual Friday. Everything because of July 4th, right? So on Friday the US guys are going to have bank holiday already. And I decided to surprise macro guy Michał. I decided to give him a call and ask 3, maybe 4 questions and ask about his opinion ahead of non-farm payrolls. Beautiful day coming to an end. Well, Mr. Michał, good evening. How are you doing? Hopefully everything is alright on your side. First question, because I've been so surprised when I seen the previous number, right? It was the huge upside move. It was the huge manipulation in my opinion, but always devil is in details. And we know that mostly it was because of the temporary jobs, but I would like to know your takeaway. So please remind us what happened previously and what's your view about the previous non-farm payrolls day. Over to you.
Hi Peter, hi everybody. Thank you for a warm welcome back to the channel, right? And yeah, I'm pretty good, and also thank you for asking. I see that you have a pretty good view, so yeah, envy you. But okay, let's go straight to the non-farm payrolls, the main topic. Yeah, because of the reading, as you mentioned, was better than expected, and I think it was simply due to the reopening of the economy, right? The forecast was minus 8 million. But the reading was actual reading was 2.5 new jobs appeared, and simply the economy was reopening at that time. But I think right now it could change a bit, and I would not be so positive because we see that the coronavirus is spreading once more in the US, and the biggest states like Texas, Florida, and New York are shutting down once again, and it will affect once more the businesses, right? So I think it will be worse than the forecast.
Okay, great. So we know Michał's opinion. We've seen strong close when it comes to the indices towards the first half of the year. Like, come on, market is asking, what's the coronavirus? What are you talking about? Come on, guys, right? So there is a strong close to the first part of the year, strong close when it comes to the second quarter, right? Now we already know ADP outcome. Michał, what's your opinion about ADP ahead of the non-farm payrolls, and what do you think how the non-farm payrolls is going to look like?
Yeah, about ADP, what can I say? Manipulation. As I already mentioned, that the coronavirus is spreading once again, but due to the money printing and the stock market rally, we see that the part of the economy is reopening, and the reading was not so bad, but it was slightly worse than the forecast. And I think also it will be in the case of non-farm payrolls, that probably, as you said, we will see this manipulation again. But I would not be so optimistic. I think we will, based on this situation, we will see worse reading than the forecast. But based on this ADP reading, maybe not so bad that I think it should be, right? Yeah, so that is my short view about the ADP and how it could show us the outcome in non-farm payrolls.
Great, thank you very much. So I would like to ask you about your prediction, right? So tell us your number. Is it going to be, in your opinion, again, huge upside, surprise, or that's gonna not work this way this time? Well, my opinion, it might be positive. We are already started this pre-election race, so huge manipulation from the President Trump perspective. We cannot see lower levels. No way. Risk indices cannot go lower, right? Everything can go lower, but not risk, no indices. What's your thinking about the upcoming payrolls?
Okay, basically, I think, of course, I don't think we will see a surprise in the reading. I think we will see the lower level, but the manipulation, will go on. And even if we will see the worse reading than the forecast, we will quickly bounce off and go with the flow, as you like to say. That is basically my plan, that it will be this kind of manipulation, that we will see the worse reading, and then due to what I said before, that the spreading of the coronavirus again, and the shutting down of some of the biggest states in US.
Thank you, Michael. The last question. Where we are going to be after non-farm payrolls? Your opinion only, guys. Don't forget, do your own research, do your own homework. Well, we are still few hours ahead. Michael, Michał, where we are going to be when it comes to the indices and when it comes to the dollar?
About the dollar, I think we will be consolidating still at the level we are right now. It is 290 points, something like that. Maybe with a little bit of a short move to the downside. As I told, my prediction is that the reading will be worse than the forecast, based on this fundamentals about the coronavirus and a new lockdown in states like Texas and Florida. And about the indices, I think we will see all the way up to the moon, Peter, to the moon. Because also one of the printing money, the manipulation from the Fed, from the Trump side, and also that the biggest drivers of the S&P 500 and indices are the biggest tech companies, which are having good revenues. The companies like Amazon, eBay, like Facebook. So I think based on that, we will see either the price up with indices. So that's my takeaway for this whole situation. Thank you, Peter, for having me. And I can't wait for the next time we will have our conversation. And take care. Have a good one also. And till next time. Bye.
Thank you so much. Thank you, Michael, for your time. And verification is coming soon, guys. Verification is coming very, very soon. So within the next few hours, we are going to see if the market is going to prove us again. Guys, coronavirus, what the heck you are talking about? With that being said, have a great day, have a great rest of the day. Here in Europe, day is coming to the end. Nice view. And well, let's have a look where we are tomorrow at the same time. Have a good one. Goodbye and good night. Take care. Bye. Alright guys, let's check few charts. Let's start with euro dollar. Actually, no change almost everywhere. No change in view. Dollar is losing the ground. Well, if I'm going to say losing the ground a bit, might not be enough. Anyway, with euro dollar, we have those two lower shadows when it comes to yearly open, when it comes to this week open and previous week open. All of that is holding euro dollar buy on dips for now, but don't forget guys, and we are talking about that quite a few times, that the most important things are related to the post FOMC highs, and as long as we are below, still dollar got the chance. So from the intraday perspective, again, congratulations, it was again buying the dip. So for those who were buyers here, congratulations. As I mentioned yesterday, I took wrong euro. I've been trying to trade euro pound longs, but anyway, we are going higher. Another wave of higher levels when it comes to the euro dollar. More stop hands probably ahead. When I'm talking about the stops, I'm talking about this Monday high, right? And well, it's gonna be very, very interesting to see how the bears from the intraday perspective are going to behave, right, inside that supply. So overall for now, we can say that based on what we've seen here, and where we are right now, plus bottom here, here, and here, we can talk about some kind of the range to the downside around 1190, and to the upside somewhere close to 1290, right? So in that case, we are talking about the 100 pips, nothing extraordinary, but if you are going to be able to grab those 100 pips, it's gonna be completely different story, right? Right. Now, I'm going to try to play that range for now, but if post non-farm payrolls we are going to see the break to the upside, so 100 pips range, after the break another 100 pips to the upside is possible, so retest of the FOMC levels could be in play, right? Because if you are going to break 1290, 13, 100 pips to the upside, 114, okay? So that's how I see the things for now. Of course, because of the move to the upside we've seen yesterday, the bearish scenario with the retest of 110 is going to be delayed or even cancelled if we are going to see the close above post FOMC. So summarize, euro dollar trying to fade any kind of the failure around the top of that range. In case of the upside break post non-farm payrolls, I'm going to try to buy the dip with the 113.90, 114.25 target when it comes to the euro dollar. The next one is the dollar yen. Well, strange behavior yesterday, but maybe looks too deep for me, but anyway, maybe we are going to hold, and we can call that one as a test, right, ahead of the higher levels. So for now, as long as we are above this particular trading range, I'm talking about the 12th of June, right? So as long as we are above, it could be this type of the price action from here, or deeper pullback, retest of 107, and then rally, right? So I'm watching very carefully, because lately I had an idea to try to sell that pair, but because of Tuesday price action, Monday, Tuesday price action move higher, right? Well, looks like based on the chart only, it could be test and the higher levels could come. Now we've seen a little bit of the disconnection yesterday, strong move up when it comes to the stocks and strong pullback when it comes to the dollar yen. But if you are going to get the good non-farm payrolls number, there is a chance we are going to see at least retest of this high, if not higher levels. If we are going to be able to take out yesterday high, then 108.40, right? Again 108.90, and of course levels close to 109 could be in play, right? So for now, because of where we are, because of what is going on, I'm looking to buy the dips on the dollar yen. What kind of the dips when it comes to the intraday chart? Well, I think this kind of them, it's better visible here on the intraday chart, this consolidation, right? Eventually mid of that consolidation, and as you can see, levels close to 107 here might be in play, right? The only question is if we are going to get that deep move to the downside, all right? Because it could be that this consolidation, all right, it might be just attempt to break with strong reversal quickly. So that's also to watch. So for now, as long as we are above the range from the 12th of June, because of what happened this week, I'm switching a bit towards buying the deep dollar yen, right? If situation is going to about to change, I'm going to make an update about this particular cross. And the last one is a cable. Didn't close as expected from the bears perspective yesterday, so we closed above this 24.65, 24.70 or around these levels, all right? The close was 74, so above 70. So there is a continuation to the upside, and we are breaking, as discussed yesterday, we are breaking the correction waves to the upside because this one is the bigger one. So probably what might be in play, this type of the action, right? So again, 25.40, these stops could be in play. We might see some hunt of that stops, and we might see rally towards this double top, so meaning that we might revisit 126. To the downside, in case of the break of a daily open, if the bears are going to manage to move below that level, so if we are going to be able to get back below, let's say 24.65, it could open the way to retest to 124 when it comes to the cable. Let's have a look what we have from the intraday perspective here. Equal moves. This is about to be broken, or it's already broken. Right here, right now, we are testing blue line, so the possible supply based on the weekly chart. A little bit of the action here is visible, all right, but we have to get back below this particular shadow and below this 24.65 mentioned second ago, to think about the short side when it comes to the intraday perspective, because we have the breakout of this consolidation. So this is working for now as the intraday demand, right? It could be treated at some point as a failure, right? So it could turn out as a false break, strong move to the downside, retest, and continuation to the downside. For now, there are the buyers on deep. We need, from the seller's perspective, to see the break of 24.65. Guys, big day. I do expect very high volume around the non-farm payrolls. Some big guys probably will try to position themselves for the next week. Don't forget, again, a long weekend in US. So around the Europe close later today, it could be like almost end of the day, end of the week. So don't be trapped with some kind of the big exposure. All right. If necessary, I'm going to make another update post non-farm payrolls. Guys, good luck, fingers crossed, and see you around. Take care and goodbye.